Okay, welcome back to another edition of the Morning Mailbag with Coach T here from TackleTrading.com. Take control of your financial future. All right, into the Clubhouse. An interesting question over the weekend from one of our members, one of our pro members, Bob Rotolo. And I wanted to get into it, try to help Bob understand one of the concepts he was struggling with. Now, by the way, if you're a member at Tackle Trading, go use the Clubhouse. Lots of good information over there, and it's updated regularly. People are talking, chatting, hanging out, talking about trading and concepts and ideas. It's really, really good stuff. Bob, I'm going to come down here and load more in here. Let's see if we can find it. There it is. He says, in the cash flow options course, there's a chart showing the exponential time decay of an option with the option value on the vertical scale and the time on the horizontal scale. Is there a way in TOS to duplicate this time decay graph for an option trade? Thanks for the help, Bob. And this is the graph he's talking about. It may look a little different than this in some books or manuals, but it's basically the same idea. Option value on the left, time remaining till expiration. So can we conceivably build a graph to measure this exactly for what our option will do? No. But you can build lots of graphs that might help. What this is doing is showing you a theoretical concept and helping you try to understand it. What it's telling you is that from 120 days to 90 days, you don't get that big of an impact. From 90 days to 60 days, a little bit more, but not quite as big. 60 to 30, it does have an impact, but not quite as much as 30 to 0. Most of the time decay that actually happens on an option is experiencing itself, that's not how you'd say it, is experienced in the last 30 days. What does that mean? Well, if you sell short-term options, they're going to get a lot of time decay. Weeklies, monthlies, that kind of thing. Does that mean they're better than 60 or 90 or 120-day options? No, they're different. Because longer-term options are more impacted by volatility and different things, and you get more cushion, and so it's a constant trade-off in the markets. One thing you can do in TOS, Bob, is you can go into the Analyze tab. You can build a spread for something you're going to work with. Let's say that you're trading, I don't know, and let's say a Netflix or Apple just had earnings. ExxonMobil had earnings this morning. Let's do that. ExxonMobil, simulate a trade. Let's do an iron condor. Let's do an iron condor for 46 days out. We can change this in just a minute. And the chart shows me on Exxon that we're at 90. Rallied, bounced, actually called that this morning, and that we probably need to be up here about 95, 5 points up, and down here at about 85. So I go back to the Analyze tab, I right click, I sell that 95, and I'm going to sell it as an iron condor. Now this is a classic theta positive strategy, so it's a good one for our example here. If I sell a 95, buy a 90 or a 100, and sell an 85, I'm equally 5 points up and down, and buy an 80. Do this for, I don't know, let's do a lot of contracts so that the numbers get out bigger, you'll see it better. Let's do like 20 contracts. Okay, this would be a big boy trade. Now, if we look at the risk profile, let's reset this so we can see everything. The classic at expiration risk profile just shows us where our break-evens are for the stock price, okay? But if you come up here and you have it measure instead of PL open, if you have it measure theta, it will show you, and if instead of one at expiration, we do a day step for 4 days, it will show you the impact of theta. Now this is why, Bob, that theoretical graph can't be measured exactly on your option because it depends on where it is. See, on an iron condor, for example, theta is only positive in the middle. If it moves outside of the theta switch, which in this example is at 83 and 98 and change, you no longer even have a cash flow trade. Trade just went cash flow negative. So the option time decay graph doesn't necessarily work. Well, what about just buying? What if we just own call options instead? Would it come out the same way? Let's simulate that. Let's go out to the April options, which would be 74 days. Let's buy the first strike out of the money. It's only 42 cents. Let's look at the number of contracts. Those are $2, $280 a piece. Let's pick up 20 of them. Pick up another big, contract size. Pick up 20. Now, if you look at the time decay graph for what theta will be at different points, you'll notice, and let's make sure, yep, we're just measuring the single, is that theta dips down really low if you stay at the strike price. So after 7 days, 14 days, 21 days, 28 days, theta is decaying at that rate that you were seeing in your graph, in your picture. But if it moves really far in the money and you're making a lot of profit, theta actually doesn't become a problem. It pretty much normalizes itself. So the time decay impact depends on where the option is relative to the stock price and how far out you are. There are more variables than just the graph itself. The question I would ask anybody if they were looking at it 101 is, well, what is it you're trying to really calculate? Are you just trying to put information up on a screen to get it, or are you trying to figure something out that's going to help you make a decision? If the latter, let's try to figure out what we need to be able to make our choice, okay? If you buy options, they lose money from time decay. If you sell options, they benefit from time decay. If you do spreads, it depends on where they're at. The more information you have, the better off you'll be. The better chance you'll have to actually build a successful and profitable trade. Bob, we can discuss this a lot more as we go. It's a good question. I know it's not the perfect answer because it's actually just coming back saying, hey, it's kind of complicated. And you have to look at more details than just the theory behind it when you're actually getting into application. From Coach T at tackletrading.com, this is another edition of the Morning Mailbag. If you're interested in what we're doing at Tackle Trading, watching this out there on YouTube or Facebook or Twitter or whatever it is, come and join us. We got all kinds of different stuff. We have paid memberships from our pro membership where we give our scouting report, newsletter, coaches shows. We're going to have one tomorrow at 7 Eastern time, by the way. We're moving that time. And also join us in the Clubhouse. We got a lot of free stuff as well. For members that just want to kind of come over and be a part of our team. We're building a trading community here. So come be a part of it. Get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.